It sounded stupid when I said it. Violence at NBC.
I heard you around or about in the lunchroom.
See, there it is. Violence at NBC, GE.com. I mean...
Well, Allison should know.
What is the internet anyway?
With an email address, you can tap into 20 million other computers on a worldwide system called the Internet.
Internet is that massive computer network, the one that's becoming really big now.
You can get to South Africa or anywhere else by going through a series of menus or typing an address.
You can send and receive mail to and from people all over the world.
It's interesting because one would think if you're anonymous, you do anything you want. But people have in a group have their own sense of community and what we can do.
Remember, not everything on the internet is picturesque or even pleasant.
It came from California, maybe. Traveled by electronic mail. It spread across America. How insidious was this virus?
Well, it spread very quickly.
What do you mean? How does one, what do you write to it like mail?
The internet, at first, when you look at it, and when you go through it, can seem overwhelming and complex. But actually, as you take it one piece at a time, one bit at a time, and explore it and have fun, it gets to be easier and easier.
The one thing that's missing, but that will soon be developed, is a reliable e-cash, a method whereby on the internet you can transfer funds from A to B without A knowing B or B knowing A. The way in which I can take a $20 bill and hand it over to you, and there's no record of where it came from. And you may get that without knowing who I am. That kind of thing will develop on the internet, and that will make it even easier for people to use the internet. Of course, it has its negative side. It means that the gangsters, the people who are engaged in illegal transactions will also have an easier way to carry on their business.
It's a huge transfer of wealth that's happening right now. The last time I saw something like this was back during 1994 to 1995. In the early to mid-90s, individuals were making just enormous amounts of money buying companies like Dell, AOL, Microsoft, Netscape, and some of these smaller internet stocks. And the institutions had completely missed that bull market. And so they were scoffing at these so-called lemmings. And so during 1994 to 1995, we had a bit of a bear market. And so, again, institutions were out saying that, oh, anybody buying internet stocks, you're idiotic. And so you had a lot of people selling their AOL, selling their Microsoft, selling their Dell shares. Guess who was buying? It was the institutions. If you look at a chart of institutional allocation to venture capital internet deals, it doubled between 1994 to 1995, which was exactly when institutions were saying, oh, this is just a market for idiots. Mm-hmm. Nobody should be buying this stuff. Mm-hmm. So they literally stole all this wealth that should have been in the hands of individuals that owned Dell, Microsoft, and AOL. And then from 1995 to 2000, of course, we saw $5 trillion come into the market, and the biggest bull market we've ever seen. So this blueprint of creating fear in order to get cheap prices is nothing new. So
this one is really important to me because the housing crisis, those banks, they bought up all of those houses. They were the ones who caused the problem.
Right.
Then they were talking everything down and saying, "I'm just taking the junk off the table."
Yeah.
That's not junk now.
It's not junk. When it's dropped 40 to 60%, it's not junk. So this happened between 2011, 2012. Blackstone Group buys 50,000 homes, but during this period of time, the regular individual couldn't get a mortgage. Right? It was virtually impossible to get a mortgage during this time, exactly when institutions were buying. And then the dot-com crash in 2003, if you can go back and look at old CNBC clips during 2003, even as the market was starting to come up, oh, don't buy tech stocks. No, they're evil. Don't buy tech stocks. Don't buy tech stocks. But institutions, if you looked at the 10Ks, the Qs, and all of the filings, the quarterly filings, they were all loading up on tech.
This is how the rich get richer.
Yes.
They know, they're connected, lot of times they're coordinating without the insider trading. This is not illegal to do.
No, manipulating the news cycle, if you're smart about it, is they can get away with it. Nobody's ever been arrested for anything like this.
So now, with crypto, I know personally, I know people that would have gotten in or stayed in if these people weren't saying what they're saying.
Right, and so this has really been extremely egregious. So on September 12th, Jamie Dimon says Bitcoin is a fraud. He says he'll fire any one of his traders buying Bitcoin. Bitcoin drops 24%. When Jamie Dimon speaks,
people listen.
People listen. So that weekend, we found out that the largest buyer of a Bitcoin fund that's in Europe that buys physical Bitcoin, right? The largest buyer was Morgan Stanley and JP Morgan. And that's not illegal.
He says it's a fraud.
It says he'll fire anyone that buys it. Yes.
And at the same time, his company is buying it.
His company is buying it.
So it's just, I mean, so unethical.
Right.
Okay, George Soros.
George Soros, in January 24th, price was already down, calls Bitcoin a bubble, says Bitcoin is the worst, the worst investment in the world. Don't buy Bitcoin. Don't buy Bitcoin. Basically throws gasoline on the fire at this point. And then what do we find out? So he says bubble here.
It drops 44%.
Right. And then here in April, 2 months later, guess what we find out?
Yeah.
His $26 billion family office has approval to buy cryptocurrency.
Right. And we only knew about it publicly here. And this is the kind of thing that George Soros is famous for this, talking the sterling down.
Yeah.
And what did he do? He stole the pensions of all the little people.
Yeah, made $1 billion.
Yeah. Okay.
So then here now, Goldman Sachs, this, again, February 7th, most cryptocurrencies will crash to zero. Now, I remember when they said this in February, and I had, through my network, I knew that Goldman Sachs was setting up a crypto trading desk. Absolutely knew they were setting up a crypto trading desk. And
I remember you telling me that.
Right. And then, of course, they were denying it. No, we're not. No, we're not. No, we're not. Price falls down 27%. And then what do we find out? We find out here, they say BTC 0. And then we find out just before May, new trading desk. Not only that, they put $400 million to buy a cryptocurrency trading platform. Okay, so February 7th, it's all going to zero. May, we just spent $400 million just on a flyer.
And they're not the only ones.
No. So you have a lot of institutions that are coming. You had Christine Lagarde from the IMF come out. And this was, what's funny about this, Glenn, is it was all around the same time. It was almost like I can't prove collusion, but, it walks like a duck, it quacks like a duck.
And you know what?
It's probably a duck.
The people, they all hang out together, they all think alike. It doesn't have to be calling each other.
Yeah.
They know this game.
Yes. So IMF, Christine Lagarde says in the first part of the year, says all central banks should band together against cryptocurrency. Right. Have you ever heard her say all banks should band together against illegal arms?
No.
Or illegal drugs?
No.
Or human trafficking?
No.
But this nascent asset class, we must all join arms against.
What this did was play into people's heads that these guys are never going to let Bitcoin survive.
Right.
And so people thought, this is over.
Selling. Yeah.
In case of Bitcoin, there is no income, there is no use, there is no utility. The only thing is a speculative, self-fulfilling kind of rise. And that rise is driven totally by manipulation. There have been academic study suggesting that this pseudo-stable coin, Tether, is being created by fiat. This year alone, the increase in the supply of Tether has been another 16 billion out of the initial 4, so it's 20. And every time the price of Bitcoin goes down, literally overnight they issue more of this Tether that is used literally to manipulate the price of Bitcoin. So the price of Bitcoin is totally manipulated by a bunch of people, by a bunch of whales, doesn't have any fundamental value. And like in 2017, when it went from 1,000 to 2,000, and then in 18 it crashed from 20,000 down to 3,000, I think we're close to the point in which this hyperbolic bubble is going to go bust. And it's going to go bust because law enforcement authority are having an investigation of Tether and of the company behind it. And in my view, like in the case of BitMEX, that was the biggest scam and criminal derivative cryptocurrency house, has been indicted. You can have an indictment also of those who are behind Tether. When that's occurring in the next few months, there'll be a crash of Bitcoin and all the other cryptocurrencies. They're not even currencies, they're shit coins.
Print too many dollars, you think the dollar's going to collapse, fine. What are you going to replace it with? What's your replacement? And no one has a good answer to that question. It's not impossible. I mean, it could be the special drawing, right, the SDR at the IMF. It could be gold. It could be a gold-backed SDR. It could take a digital form. I'm not talking about Bitcoin. I'm talking, I mean, the dollar is the leading cryptocurrency because the message traffic is encrypted and it's mostly digital. I got a few dollars, maybe a $20 bill in my pocket or something. In Philadelphia, Philadelphia would call that walking around money. But the point is, the dollar is the leading cryptocurrency because it's a digital encrypted message traffic payment system currency. And then you say, well, what about, people say Bitcoin or whatever. Or the Chinese yuan? Forget the Chinese yuan. What people don't understand is that when we say, 60% of global reserves are in dollars, they're not like pallets of $100 bills stashed away in the basement of the People's Bank of China. It's dollar denominated, but it's not dollars. You have to go buy an asset that's denominated in dollars, and it's primarily treasury bills and notes. That's what the Chinese own. So the point is there has to be an instrument, and in my example, treasury bills and notes and bonds that you can buy. So where's the Chinese yuan bond market? It doesn't exist. I mean, barely. Where's the Bitcoin bond market? It doesn't exist. In other words, none of these so-called alternatives have a bond market that you can actually invest in. Bitcoin has another disability, which is that this guy, Satoshi Nakamoto or whoever, supposedly invented it. I mean, somebody invented it. Are we sure it wasn't a deep state team from Raytheon? I mean, who knows who actually is behind this thing? But it doesn't matter. If you want to buy it, knock yourself out. But the point is, there's no yield on Bitcoin. You can call it a currency if you want to. Good luck buying a cup of coffee.
Bitcoin piece of it will end up being, maybe Jamie Dimon is wrong that it won't not exist, but it'll be relatively small compared to the overall disruption that blockchain technology, ledger technology can bring to the economy, to all those transactions that you talked about and more.
If I had to bet when the financial history of the second seventh of the 21st century is written, the 40 years from now, the blockchain and all that followed from it will figure more prominently in that story than will Bitcoin, because I think that the verification and confidence without trust, and enabling that to be done more pervasively, will be the most fundamental innovation. And while I'm aware that there are a variety of arguments that you can't really get all those benefits without Bitcoin, my suspicion is that ways will be found to get many of those benefits without the extra uncertainty associated with the fluctuation in the value of Bitcoin relative to the ways in which people currently hold and hold money and denominate transactions.
Is there a possibility that Ripple could take over SWIFT one day?
Well, I think what we're doing and executing on a day-by-day basis is, in fact, taking over SWIFT.
So it's kind of chicken and egg. You have to create a marketplace. And right now, we have about 150, 200 exchanges around the world that trade in XRP. A lot of it, as you say, is very shallow trading by individuals. And that is not the use case that we are pursuing. What we are pursuing is the use of XRP as a financial asset by sophisticated institutions as a bridging mechanism. So does this hurt or harm? Well, it creates a lot of noise. And, we certainly don't want that much noise, but we're waiting. And for example, this last quarter, the bulk of XRP sales were to institutional investors. And as this transitions away from retail to institutions who start to use it for wholesale financial usage, that's when the turning point will come.
The key phrase in the Great Illusion, the Great Reset, enabling money to move like information, and the derivatives rate reconversion. You need blockchain to do this. A distributed ledger would work best. But if we do look at what the Great Reset is in earnest, it's that this infinite expansion model of economy that we've built on for the last 200 years does not work any longer. People who are used to high standards of living, quote unquote, resettling the Western peasants, reducing the lifestyle, distribution so everybody is equal. And these circumstances did not just rise instantly out of the ether yesterday. The Fed was injecting hundreds of billions of dollars into the market to keep it from fully collapsing back last year in 2019. First it was panic in September, and then it was like super double uber panic in December, and then suddenly lockdowns, all the economy crushed, no problem, everything hidden at that point. So the amount that they were putting in every single night, at least 100 billion, then it was 110 billion, 105, and it was going to continue upward. And these repo rates were unsustainable. And the house of cards was coming down at that point anyway. And this reset has been talked about for such a long time at Agenda 2030. This 2020 is nothing more than a benchmark year. It's not the end of the plan. It's benchmarks moving into the 2050 ultimate completion of this plan. So Agenda 2030 is just a benchmark. And no, Adapt 2030 is not based on Agenda 2030. It was that we have to adapt our food growing strategies well before 2030 so we as a human species can get through this and keep our civilization intact. This grand solar minimum's throwing some curveballs already with agricultural production, and suddenly the sustainability language comes in. And this was the whole thing about the last 20 years, IPCC, sustainability. It was all part of this same movement to the 2050 completion date. There were the different years, 2021, 2030, 2035, 2050, and keep your eyes out for those. But what's the best way of making the population cooperate with this strange reform? Because it has to be a complete destruction of the old system, the old ways of life, the old things we know, and rebuild it from scratch again, literally from zero up new. How do you retrain people? That's impossible. There's so many people on this planet that are going to say, no way. And they said it well, promises of pleasure are not enough to get you to switch over, so it's going to be fear and stress. Now, the problem with that is, if we're going to go on a scale of 1 to 10 of fear and stress that we've experienced since the beginning of 2020, where we need to go to get this whole reset done, so far, if we're going to use that as a unit, so let's say from January to November of 2020, I'll give that about a 1, from 1 to 10, where we're going to go. Because the reform is meant to disrupt all areas of life to the point that it shatters to zero, and then they can restructure it, rebuild it on a planetary scale. Everything from government, international relationships, going to the global governance models, finance, energy, food, medicine, jobs, urban planning, real estate, law enforcement, human interactions, 6 feet apart. They're going to reshape the way you perceive reality, how you interact with reality. Now, this global reset in itself can be broken into 2 different main points here. This is the end goal, really. Every element of nature, every life form is part of a global inventory managed by the state using technology to determine who gets what. Better termed as a technocracy. Point 2, all inventory needs to be strictly accounted for, registered in a central database. Now, this can only be done by blockchain technology and AI, artificial intelligence. It's too much to even comprehend for even every human on the earth to start to do this. So it doesn't take that much of a jump or a stretch to think once everything's inventoried in a new reset of economy, then a nation's resources could be the base of a new monetary system issued like gold-backed, natural resource-backed central bank digital currencies. Because if you're a student of history and you notice every 400 years we go through these same changes, the economy collapses, population migration, food price increases, inavailability of food, and the fabric of society unwinds for some time, and then it's restructured. I encourage you to go back every 400 years, back about, say, 3,000 or 4,000 years from present day, and just keep going back about every 400 years and look at the massive changes, massive volcanic eruptions, huge societal disruptions, and it's on a pattern. Yeah, this pattern seems to be something special because the level of technology is here to oversee and control literally every aspect of every human on this earth. And another key point and almost the cornerstone of the entire plan here is your ability not to access food. Your ability to get food being the main reason that you'll go through every single hoop, hurdle, and fire ring to get to it. Because by destroying the livelihoods of many independent farmers who are competing with edible products, can you think cricket, protein, cockroach milk, etc.? Check. And disrupting of the supply chains for the food, whether it be the slaughterhouses, the packing houses, processing facilities, grain storage, transportation, whatever it is, the more you disrupt the food supply, the more scarce food gets. Well, that would raise prices anyway and collapse the economy, but now use that as a control device, and we're getting into the nefariousness of it all. Now, you might say, that's great and dandy, but how are they going to do that, and why would they do that? What about this money reset thing? Doesn't make sense. Dollar's still working. You're crazy. I'll say LIBOR. You'll say what? I'll say SOFR. And you'll say, I don't know, are you speaking English? LIBOR is going away. It's going to be replaced by something different called SOFR. Where we need to start is the International Swaps and Derivatives Association, ISDA. And they even quote here, the current derivatives infrastructure is hugely inefficient, costly. It has to run through too many different protocol systems, banking-wise, across the planet. You can't scale it. You can't put the automated solutions in there. It's got a huge bottleneck at the moment. What they want to do is break down that system completely and reset it up under blockchain, distributed ledger technology running off RippleNet. And even there in blue, once in a generation opportunity to restructure the foundations of the market. Grasp this opportunity. So we're looking for the timelines on this, and this is what I want to talk about here. When is this all going to kick off, and when is the biggest amount of financial chaos going to start ripping through the planet here? Well, the thing that needs to go away, as you look for this in the news more and more, is called the LIBOR. It's the London Interbank Offered Rate, or the London Interbank Overnight Rate is another way to term that, where banks will lend to banks in the evening when one bank's closed for however many hours during the evening. You know, they quit work at 4 or 5 o'clock, and then they don't reopen until 9 a.m. Well, that money can be sent over somewhere, and a digital transfer in another part of the world can use it, and it's just a big shell game. This LIBOR was started in 1986 and underpins about 300 trillion of financial contracts. That is a really low number. I've seen it as high as 780 trillion. Most numbers are right around 750 trillion, so that's about less than half. When's it going to be phased out? By the end of 2021. All right, so that gives us sort of a ballpark figure, but let's see if we can zoom in on a day exactly when this is going to start. So they're going to need an alternative. They're going to have to switch systems, and they're going to be moving over to what's called the Secured Overnight Financing Rate, SOFR. And there's another sliver of that over in the UK there, the Sterling Overnight Indexed Average. These are unsecured transactions, which again, RippleNet's instant liquidity, on-demand liquidity option fits right into this. And you'll start to see that all these central banks and banking institutions that are involved in this are the same ones that are on RippleNet and the base layer protocol to move money around the planet. So this secured overnight financing rate is just a benchmark floating rate that's on the way to supplant or replace LIBOR. And if you want to lump all these into one single, I guess, catchphrase, alternative risk-free rates, RFRs. So you'll start to see this more. That includes SONIA and SOFR both. So it's kind of like saying a central bank, but it includes, you know, the Federal Reserve, the European Central Bank, Bank of Japan. Sort of the same thing. So look for RFRs popping up in the media more, and you know that's the risk-free rates that they're moving to. Now, these new protocols overseen by ISDA, that ISDA, which was the International Swaps and Derivatives Association, is going to help market participants transition from the interbank offered rates from London LIBORs into the new risk-free rates, SOFR and SONIA. Now, this is going to happen no later than the end of 2021. And these platforms are already up and live, so you can see what the interest rates benchmarks are going to be moving forward. And even the designers of this whole switchover, it's going to be a full collapse to zero, so everything's going to go to zero on the LIBOR. It's going to move over and be switched, revalued into this new system. in which the transition is likely to lead to a range of challenges. Okay, that means breakdowns, bottlenecks, complete fiasco, in my opinion, until they really work out the problems with this. But how long is that going to take? Imagine of those of you who worked in corporate America or corporate world saw these kind of incredible breakdowns in your IT departments just trying to wire together 50 or 100 or 200 computers to run off of a central database. Can you imagine trying to rewire the world to get them all to work together at the same time on a flick of a switch on day one? So they even put the range of things expected to break down in the transition here. The price contracts themselves. Can you imagine? They'll have to halt trading, period. They're going to shut down the entire markets. Price contracts broke. How about to communicate the challenges to customers? How do you explain this to others? Your customers out there. They'll be like, what? I don't know. The fallback language is all about contractual defaults and obligations. If something were to go wrong, that's your fallback language, and it'll have to do with the different rates as well. So maybe if you're quoted in one rate and it goes wrong, then the fallback language will be where it settles at. Adjusted IT process, again, that's going to go wrong for sure. You can guarantee IT is not going to work correctly. The new benchmarks in the risk management procedures, I mean, how long is that going to take to get up and running? And here's the biggest one. Ensure that the legacy exposure is minimized. Well, that's going to be a tough call to pull all that legacy exposure of $750 trillion into the new systems here in a single day and not have it go haywire. I can't see a smooth transition. I really can't do it. Can't see it. Because in addition, what they're going to be writing on is this CDM data model. Machine readable, machine executable models for derivatives products. This is all about standardizing how derivatives are traded and managed through the life cycle. And talking about the fallback rates, this PDF is also linked in the description box below. But look at the players inside here. And if we're looking at the Bank of England, Bank of Japan, Reserve Bank of Australia, Federal Reserve in New York, they're all inside the RippleNet protocol as well, using their own internal ledger settlement systems, so they're all running on RippleNet. Which is interesting because the protocols supplement live date day one, January 25th, 2021. In my opinion, this is going to lock the markets up completely. They're going to have so many difficulties trying to get this thing to go live that they're just going to cease trading. They're going to cease everything in the markets and just lock it up until they figure it out. What a convenient excuse for chaos upon chaos. Having you wear a mask is one thing. Losing your life savings is completely another. So the fear factor, again, it's all about the fear. And if we look through what's already been pledged in for the conversion on day one, we're looking at about 70 trillion or so. Now, this was supposed to have pre-executed already, and haven't seen much in the news feeds about this. And Lynette Zhang over at ITM Trading, who's much more well-versed in this than myself, I linked to her videos as well, so you can look at the way she describes this derivatives fiasco. She's also saying that 80 trillion she can't find or see in the news media as well. But this is straight from the CME group pushing out off of SOFR's publication the amount pledged already into execute minute one, day one. And this is why the transition's moving. It needs to go to this distributed ledger technology, this DLT. It's not blockchain as you understand it. It's distributed ledger, which is different. They can settle every 3 seconds, but it's got to be seamless, real-time, certain, cost-effective across all nations, everywhere across this planet, integrated into one global system. It's very close to one global currency, but it's not a stable coin going out where you and I will be able to get it. This is institutions within finance operating in the interbank system. So this is all about the access to on-demand liquidity through digital assets. So there'll never be another constraint like there was with the overnight lending rate that really crashed the system from September into December. And that's truly the reason I think that the economy is being locked down right now, is because to hide that fact. And a RippleNet advantage solves all of that. 55 countries, 120 currency pairs so far, and then it's going to get into the derivative swaps, and away we go. Decentralized infrastructure, modern messaging, liquidity solutions. Brought to you by RippleNet, by the Bank of International Settlements, International Monetary Fund, World Bank, and those underseen in that, central banks, and the credit default swap markets. They're pulling for you. They love the individuals. And also when we see Ripple sharpening focus on dynamic payments across Europe, Southeast Asia, and expanding the development arm and investment arms, boom, that's right in the center of that. So right on cue, they're getting ready to roll out in Asia as well. It's all about the fear. Control you, you're going to lose your life savings. Imagine how much terror that's going to cause and what people will do to try to save any penny they can. A mask is nothing. So we'll see on January 25th what's happened. I thank you for watching. Hope you got something out of the video. Hope you're getting your preps in order. Whatever's happening right around that January time, it's going to be tumultuous, so you might as well get prepared now.